Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call, the last Bazaar Morning Call for the week. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, hi, good morning. This promises to be a long day for no other reason except the fact that we've got two quarter-final FIFA matches, right? Late into the night.
I don't know about you guys, but after a long week, interest it'll wane through the end of the day, but let's see.
Maybe the first one, Sonia, right? The first one is early enough. I think about 8:30, right?
Yeah, who are you going with?
I mean, it's a tough one. I mean, I'm kind of neutral with this one.
I think the midnight game, I'm going with the underdogs. I'll go with the Netherlands. And
always go with the underdogs, but this FIFA World Cup has been about the underdogs.
That's true.
Absolutely.
But Messi has been playing some of his best football, and on his day, I think he can beat anyone. So let's see how that works. 12:30. We need to save up some steam for the midnight game.
Maybe. It's too early in the morning to even think about the midnight.
So maybe an afternoon nap,
long day to
then, save energy all the way for later in the day. Let me just quickly get back to the market. Just quick run you through what the setup is looking like this morning and get the ball rolling. So, we had a reversal. This late into the there is no let-up in excitement with these surges and these sell-offs. One would have imagined, and I think it would, volatility, etc., would reduce as more and more market participants head out to holidays, etc., but not yet. So we have seen reversal moves in US, especially across tech stocks. The tech index, the Nasdaq, for example, was up, in a significant way, 1.25% or so. But some stocks in that index moved quite a bit more. The S&P is reversed exactly from 3,900. 3,900 has been a pivotal level around which, the markets on the S&P has taken either support or it's acted as a resistance. It's bounced off that level once again. Oil prices have jumped. We saw a big jump, about 3%, 3.5% or so. There's a big US pipeline system shutdown. But oil prices sold off again. And this is a very bearish signal for oil, that even with supply chain disruptions, prices are not able to sustain. And this is not as if prices were running up and then, you had this bounce which got sold into. Prices have been falling. There was the supply disruption and prices head back down again. It's good news for India from a macro perspective, but so far the impact of falling oil has not been a positive one for risk assets like equities around the world. It's more been on the lines of a deflationary impact. We'll discuss more about this. Banks yesterday, coming to the action here, surged, and I think that was basically the last hour highlight. Bank Nifty hit a new high. Three stocks, that's ICICI Bank, HDFC Bank and Axis Bank, made up about 80% of the Nifty Bank rally that we saw in trade yesterday. I would imagine that is a space to look for ideas, to look for setups, positive setups if you want to go for longs. I think that was entirely responsible for that 50-odd point closing gain that we had on the Nifty as well. For the Nifty, I've just charted some retracements. The 38 and the 50% retracement of the recent fall that we've seen is 18,665 first, which is not very far away. It's about 50 points, 60 points away from where we closed yesterday. And the next one, the 50% retracement of this fall, is 18,708. So these would be the levels to take out. And these would be the levels around which you should expect to find some resistance as well. On the downside, as we've said always, the 20-day for the last many days is something we've highlighted. That's now around 18,488, and that's something to watch on the way down. Hopefully, we didn't get there, by the way, even with the sell-off that we had over the last 2 days. We bounced off before that. So that's the level to watch on the downside. Later in the US session, we get US PPI. That's Producer Price Index number. Next week is CPI. Just an interesting anecdote. This is only the second time this year that you got the Producer Price Index number coming in before the CPI number. And that's why there is a lot of chatter, about the importance, the significance of this, etc. But just remember one thing. Producer prices are what producers pay and what vendors absorb. There is vendors may decide to absorb, companies may decide to absorb. The CPI is the real deal because that's what, at the end of the day, hits consumer wallets. So a lot of chatter around the significance of PPI and how that may move markets. But I would say, the big one, of course, is CPI, and then, of course, the FOMC 1 day later. But that is only next week. Sonia, hi. Nigel, hi.
Hi, morning. So there's lots to watch out for next week, right? Yeah. But given the positive handover this morning, it looks like the start at least will be in the green for the index. The SGX Nifty is now up in excess of about 30-odd points. And for our own markets, okay, it's almost an 85-point gain now. So it's going to be a big opening. For our own markets, Prashant was pointing out the key levels, but by and large, it's been a range-bound market between 18,400 to 18,800. And the buy on dip strategy is something that has worked over the last many days. So perhaps even in trade today, it could continue. The only thing is FII selling, there was a large figure yesterday, a sell figure of over 1130 crores. It was not compensated as much by DII buying. So generally, by the end of the year, before the year ends and FIs go on holiday, there's a little bit of money that sort of moves out. So that's what's taking place. And, you know, there was a long build-up in the banks yesterday, you know, as Prashant was also mentioning. So perhaps this record high that the Nifty bank saw, the momentum could continue over there. Just a couple of things that I want to mention. Motilal Oswal put out a very interesting note where they said that the next big trigger for the market, one, of course, is Brent moving lower. That also ties in with a lot of commodity costs moving lower, and that's positive for Indian macros. And hence, there is a margin expansion of corporate India that's being spoken about in the Jan to March quarter. So in their report, Motilal Oswal spoke about how there's a 220 basis points expansion of margins across their coverage universe, and the sectors to focus on are cement, metals, auto and consumers. So these are the four sectors that could be big beneficiaries of a margin expansion. So just keep these pockets in mind when you're looking for the next triggers for growth. And of course, lots to watch out for next week, right? I mean, there's the US CPI data, the FOMC meeting, the ECB meeting where there's a 50 basis points rate hike expected. So we have our work cut out, although it is towards the fag end of the year. But what are you watching, Nigel?
Well, yesterday, you know, the final hour of trade would be a weekly options-related expiry as well, and that's why the Nifty Bank did so well. So yesterday, you had the Nifty Bank call writers. Well, they got cleaned out yesterday. They got stumped on the wrong side. The broader markets, though, there is some participation out there, and that's what's making portfolios look good. And that's something that I like. The Nifty, though, is still pretty much in that band, the 350-400 point band. Let's address all these points. On the index futures itself, yesterday there was a bit of short covering that played out on the Nifty. The open interest was lower, the Nifty was higher. While on the Nifty Bank, it had a bit of a breakout day, and the open interest surged more than 10%, telling you there was fresh buying out there. Perfectly ties in what the FIs did. They covered some shorts, they added some longs, and they continue to remain net long on the index. On the option side of things, well, the Nifty Bank, let's take that first. 43,500 put was very active in trade yesterday. Total open interest was up by more than 10 lakh shares odd, and the premiums around 240 rupees odd. So the sense you got was there was writing out there. Remember, the premium on that strike was more than 400, 450 as well. So given that there was writing out there, the support zone is at around the 20 DMA. That's far deeper. But in the near term, that 43,000 odd mark should be an important support zone. On the Nifty, the 18,600, 18,600 put as well as call, both of them were very active in trade. And just going by the kind of writing that we saw at the 18,600 put, that's giving you a sense that you have some support at lower levels. So, you know, if you're going to get that bounce, that could get sold into. So on the Nifty, the 20 DMA, that's been gradually moving up from around 18,400 odd. That becomes a bit of a support zone. And also on the upside, till we break out, you know, and make fresh highs, my guess is still we're in a bit of a band. Everyone's talking about the Nifty Bank, but the joke on the pack for me is going to be the IT index. Nasdaq did well overnight, and that's been an underperformer this week. Can the IT index come to the party? That's what will let, you know, the Nifty move higher. For starters, SGX Nifty suggesting a gap up. My sense is don't rush to buy the opening because that's a big gap up. Intraday you'll get a bit of a dip, and buy on dips has worked, so maybe you stick to that.
Okay, well, the other big stock, and of course we'll discuss this in greater detail, there are two stocks that are very important today. One is Paytm because of the buyback that they have announced, and you know, a lot of the market feedback through the course of the last 24 hours is that this could be read as misallocation of funds perhaps because of, you know, the using cash on your books to buy back in a loss-making company is not generally the best way to move around. Also, it could be interpreted perhaps as trying to maybe boost the stock price, get more investor confidence back in. They could have maybe, you know, utilized that cash for better reasons, and that's one interpretation. But let's see, this is definitely going to be a stock on
you know, just a point's taken, and I think that though that kind of commentary is doing the round, Sonia. But I would say that it's par for the course because I mean the stock has fallen so much, right? I remember on the day of the listing, that is day one. We had VSS, Vijay Shekhar Sharma and Madhur both with us on that interview. My last question, that was day one, a little over a year ago, my last question to them was, will you, I mean, of course, markets are markets, prices may move up, they may move down, they may stay here, but if they stay here or fall more, would you consider somewhat, you know, somehow compensating investors who believed the story and decided to come in? Of course, it was day one. I mean, I was not expecting a clear answer to that. I mean, nobody would have thought that, you'd see a 80% price damage. But a year later, we are seeing a buyback. I would say, I mean, my personal opinion, nothing wrong with it. They're basically trying to, and we've seen this, right? I mean, if the promoter feels that there is value in the business, I mean, you announce a buyback and you try and kind of stabilize the price. We, for example, last Friday had put out data which showed that a lot of these companies, not all, and I looked at 5 companies, Paytm, PB Fintech, Nykaa, Zomato, and for at least 2 of these 5 companies, valuations have now fallen to where some of the global peers are trading at. So that's something which is, I think, is also important. It gives some amount of comfort that valuations are not completely out of whack with what is happening around the world. So I would look at this positively. And the other point is that 13th is the board meeting, so we'll get the contours of how this buyback is going to proceed then, right? Is it going to be a tender? Is it going to be an open market, the price, etc.? And I think that is critical to watch out as well. But I would say, views can diverge, and that is what makes a market. And so my view is, I think this is good. It's good. Perhaps should have come even earlier.
Just one word I want to make out there. Yeah. As of now, there is no promoter entity that has been categorized, right?
Yeah.
So I think if it's really going to be a sentiment booster, then the people who are running the business, Mr. Shekhar and the likes, they could put out a statement, we are not going to participate. Yeah. That could be a bit of a booster. If you really want to give confidence, you say, I'm not going to tender in, I'm here for the long haul. And this buyback is taking place to support the stock price and, to give confidence to investors. Yeah. But I'm not participating in this. I think for me, that will be the most important, given that there is no one categorized as a promoter out here. But people who are running the company, well, they have still large stakes, as is disclosed on the BSE. So that's my short point on that.
Okay, well, lots of opinions on Paytm. Let's see how the stock moves today. Will be very interesting. And of course, HCL Tech has just announced that they have they've lowered their guidance in a way. We'll talk about that in greater detail too. But first, let's kickstart the show. We have commentary coming in from Surendra Goyal of Citi, who says that India's macroeconomic stability, relative resilience, EPS growth and conducive flow environment justifies premium valuations, but the upside potential appears limited. He expects the market to consolidate and would selectively buy on dips, with their long-term view remaining positive. He says their December 2023 Nifty target remains 18,300. The bull case Nifty target is 20,200, while bear case target is at 16,100.
All right. Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're tracking Paytm, HUL, HDFC Life, SBI Life, ICICI Prudential Life, Star Health Insurance, Triveni Engineering, JSPL and SAIL. All those stocks on our radar on the back of positive news flow. But since HCL Tech, well, they pulled back a little bit and on their guidance, what they had guided earlier, well, that stock could open up in the red.
Okay, let's get some technical perspective, price action perspective with Lawrence Belanco of